Most traders come into trading with one clear goal: to make money. They open a chart, they analyze price, and immediately their mind asks one question: how much profit can I make from this trade? And that question feels normal. It feels logical. Because trading, on the surface, looks like a game of profits. But here is the truth that most traders only understand after losing money. Focusing on profits is exactly what prevents consistent profits. Because profits are not something you directly control. Your process is. And in this video, I want to explain something very important: the power of process over profits. Because once you truly understand this idea, your entire approach to trading begins to change. You stop chasing results, you stop reacting emotionally, you stop forcing trades, and you start building something structured, something repeatable, something that actually works over time. If you stay with me until the end of this video, you will understand why focusing on process creates better results than focusing on profits, how professional traders think differently, and how you can train your mind to trust your process even when results are slow. And if you want to continue building a strong trading mindset, consider subscribing to Bull Mindset. This channel is focused on trading psychology, discipline, and long-term consistency. Now let us begin with a simple truth. You cannot control profits. You can only control your actions. This is the foundation of everything in trading. The market decides the outcome. The market decides whether your trade wins or loses. But you decide how you behave. You decide your entry. You decide your risk. You decide your exit. You decide your discipline. And all of this together forms your process. Now let us go deeper. What exactly is a process in trading? A process is a structured system of behavior. It is how you prepare before trading. It is how you analyze the market. It is how you identify valid setups. It is how you enter trades. It is how you manage risk. It is how you exit trades. And most importantly, it is how consistently you follow all of these steps without emotional interference. Now let us talk about what happens when traders focus only on profits. When your mind is focused on profit, your behavior changes. You feel pressure. You feel urgency. You feel the need to make money quickly. You feel the need to prove yourself. And this leads to emotional decisions. You enter trades too early. You take trades that are not part of your plan. You increase your position size. You break your rules. And slowly, your process disappears. Now compare this with a process-focused trader. A process-focused trader is not thinking about profit on each trade. They are thinking about execution. They are asking simple questions. Did I follow my plan? Did I manage my risk correctly? Did I wait for the right setup? This mindset removes emotional pressure, because the focus is not on results, it is on behavior. Now let us talk about something very important. In trading, short-term outcomes are random. You can follow your process perfectly and still lose a trade. You can break your rules and still win a trade. This creates confusion for most traders, because they judge success based on outcomes. But professional traders judge success based on process, because they understand that process leads to results over time. Now let us move into real trading examples. Imagine a trader who is focused only on profit. They see a setup. They believe it can generate a large return. They enter early. They increase their risk. They take a larger position. They are emotionally attached to the outcome. If the trade wins, they feel confident. If the trade loses, the loss is large. Now imagine a process-focused trader. They see the same setup. They wait for confirmation. They enter only when their rules are satisfied. They risk a fixed amount. They follow their plan. If the trade wins, it is part of the process. If the trade loses, it is also part of the process. Their mindset remains stable. Now let us consider another situation. A trader experiences a losing streak. If they are focused on profit, they feel pressure. They feel frustrated. They want to recover quickly. They take impulsive trades. They increase their risk. They try to force profits. And this usually leads to more losses. Now imagine a process-focused trader. They experience the same losses. They do not react emotionally. They review their trades. They ask one important question: did I follow my process? If the answer is yes, they continue. If the answer is no, they improve. This is growth. Now let us talk about something deeper. Process builds confidence. Confidence does not come from winning trades. Confidence comes from knowing that you are following a structured approach, even when results are not immediate. When you follow your process again and again, you build trust. You trust your system. You trust your decisions. And this reduces emotional stress. Now let us talk about consistency. Consistency is the result of process. If your process is strong, and you follow it every time, consistency will develop naturally. But if your behavior changes based on emotions, consistency becomes impossible. Now let us talk about mental frameworks that support process thinking. The first framework is process over outcome. Focus on what you can control, not what you cannot control. The second framework is long-term thinking. Think in terms of many trades, not one trade. The third framework is emotional detachment. Do not let wins create overconfidence. Do not let losses create fear. The fourth framework is discipline. Follow your rules every time without exception. Now let us talk about practical exercises. One powerful exercise is a pre-trade checklist. Before entering a trade, ask yourself, does this setup meet my rules? If not, do not trade. Another exercise is post-trade journaling. After each trade, write down your behavior. Did you follow your process? This builds awareness. Another helpful practice is tracking behavior instead of profits. Track discipline. Track consistency. Track rule following. Another exercise is limiting your trades. Focus only on high-quality setups. Do not trade out of boredom. Another important exercise is slowing down your decisions. Give yourself time to think clearly. Avoid impulsive actions. If this video is helping you understand the power of process, consider subscribing to Bull Mindset, because process is the foundation of long-term success. Now let us go even deeper. Process removes emotional chaos. When you rely on your process, your mind becomes calm. You are not reacting to every movement. You are not chasing every opportunity. You are simply following a structured plan. And that creates stability. But when you focus only on profit, your mind becomes unstable. You react to every price movement. You feel pressure. You feel urgency. You feel stress. And this leads to poor decisions. Now let us move toward the final message. Profits are important, but they are not the goal. The goal is to build a process that produces profits over time. Because if your process is strong, profits will come. But if your process is weak, profits will not last. Let me leave you with one final thought. Do not judge your success based on one trade. Do not judge your success based on one day. Judge your success based on how consistently you follow your process. Focus on discipline. Focus on execution. Focus on consistency. And profits will follow naturally. And if you want to continue building that mindset, subscribe to Bull Mindset. I will see you in the next video. Thanks for watching.